Today, we're breaking down a major political and corporate fallout story involving the U.S. Treasury Department, leaked tax records, and one of the most powerful consulting firms in Washington, Booz Allen Hamilton. In January 2026, the U.S. Treasury made a dramatic move. It canceled every single one of its active contracts with Booz Allen Hamilton. In total, that meant 31 contracts worth roughly $21 million were terminated at once. This wasn't a routine budget cut or a quiet reshuffling of vendors. Treasury officials made it clear this decision was tied to a serious failure involving the protection of sensitive taxpayer data. To understand why this matters, we need to go back several years to one of the largest IRS data breaches in U.S. history. Between 2018 and 2020, a contractor working for Booz Allen Hamilton illegally accessed confidential IRS tax records. The individual, Charles Edward Littlejohn, had authorized access to IRS systems as part of his role. But instead of using that access properly, he copied and leaked massive amounts of private tax data. The scale of the leak was staggering. It included tax information belonging to about 406,000 taxpayers, many of them wealthy individuals and corporations. Among those records were the long-sought tax filings of Donald Trump, which later became the basis for major investigative reporting by outlets like ProPublica and the New York Times. Littlejohn ultimately pleaded guilty to unlawfully disclosing tax return information and was sentenced to 5 years in federal prison. Prosecutors described the breach as unprecedented in scope, calling it one of the most significant compromises of IRS data ever uncovered. For a while, the legal consequences appear to stop with the individual responsible. Booz Allen Hamilton acknowledged the incident, but continued to do business with the federal government, including the Treasury Department. That changed in 2026. Under Treasury Secretary Scott Bessent, the department announced it was severing all ties with Booz Allen Hamilton. According to Treasury officials, the firm failed to implement adequate safeguards to prevent the misuse of sensitive taxpayer data. In other words, even though the breach was carried out by a single contractor, the government concluded that Booz Allen's internal controls were not strong enough to protect some of the most confidential information the federal government holds. This decision came during President Donald Trump's second term, adding an extra layer of political context. Treasury officials framed the move as part of a broader effort to reduce government waste and enforce accountability among federal contractors. The message was clear: access to taxpayer data is a privilege, and any failure to protect it comes with consequences. The market reaction was swift. Booz Allen Hamilton's stock dropped after news of the cancellations broke. Investors worried not just about the immediate loss of Treasury contracts, but about what this decision could signal for the company's future government business. Booz Allen is deeply embedded in federal work, especially in defense, intelligence, and cybersecurity. A public rebuke from the Treasury Department raises uncomfortable questions about trust, oversight, and risk. What makes this situation especially notable is Booz Allen Hamilton's reputation. The firm is one of the most influential consulting companies in Washington, with deep ties across federal agencies. It plays a major role in national security, data analysis, and government modernization. When an organization like that loses all Treasury contracts in one stroke, it sends shockwaves through both government and corporate circles. It also reignites a long-running debate about the government's reliance on private contractors. Federal agencies often depend on outside firms for technical expertise and staffing, especially in IT and data systems. But this case highlights the risks of that model. When contractors are given access to vast amounts of sensitive information, a single failure can expose hundreds of thousands of people. From a political standpoint, the story intersects with Trump's long-running battle over his tax records. For years, his tax returns were closely guarded and heavily contested. The leak bypassed courts and congressional processes entirely, raising ethical and legal questions about how sensitive information should be handled, even when it reveals information of public interest. At the same time, the Treasury's action underscores that the punishment wasn't about the content of the leaks, but about the breach itself. The government's position is that regardless of who was exposed or why the information was valuable, the security failure was unacceptable. As of now, Booz Allen Hamilton has not made extensive public comments about the Treasury's decision. The firm has previously stated that it takes data security seriously, but the contract cancellation suggests that wasn't enough to satisfy government officials. Looking ahead, this case may change how federal agencies structure contracts, monitor contractor access, and enforce internal controls. It could also lead to stricter auditing requirements or reduce reliance on outside consultants for handling taxpayer data. In simple terms, this story is about trust. The federal government trusted Booz Allen Hamilton with some of the most sensitive information it possesses. That trust was broken, and years later, the consequences finally arrived. Whether this marks a turning point in how Washington works with major contractors remains to be seen. But one thing is clear. The Booz Allen Hamilton tax record scandal has become a defining example of what happens when data security fails at the highest level. And as government agencies, corporations, and the public continue to grapple with questions of privacy, transparency, and accountability, this case will likely be referenced for years to come.